Hey everybody, and welcome to Stock Picks by Tim. Today I want to talk about Voyager. Now they recently released their earnings call, and I'm going to leave you guys a cut up clip of that. It is about a 45-minute earnings call, and I'll leave you guys a link below as well as a bunch of links to crypto rewards, free stocks, all that good stuff. Now I'll leave you a link below if you want to listen to the full earnings call yourself. It is about a 45-minute earnings call, and I left about a 15 minutes cut up of it, but I want to give you some main points first off, and then we're going to get into it. Now, a couple things that I got out of the earnings call myself, and then I'm going to go over this screen you're looking at here. Now, first off, they are going to be introducing their debit card, their USDC-based debit card, and it's going to be offering a direct deposit, so from your work, you can have it directly deposit, meaning that you're not going to need a bank. You can pretty much just use Voyager. Now, one thing is they now have 85 total cryptos on their platform. They're going to be offering their debit card in this March quarter. They are expecting it in their March quarter, and it's going to be USDC based, and it's going to be offering a direct deposit. So you can actually, from your job, just get your money directly deposited to Voyager, completely skipping the bank. And that is basically one of their goals, is to become your bank. It's going to be an all-in-one. You can use it as a bank, you can use it as a stock trading platform, and a crypto trading platform. And as for a couple more things, before I read this off here for you guys, now one thing is their marketing costs have increased. I believe their costs for marketing have actually doubled, but I don't think that's a big concern because their revenue is up 4,400%. Yes, that's right. Their revenue, and you'll see it here as well, their revenue is up 4,400%. 164 million was up over 4,400% compared to 3.5 million in the quarter ended December 31, 2020. Comparing that quarter compared to the previous year. Now, their total verified users on the platform is more than 3.2 million, which is up almost 50% from 2.15 million in September, so the quarter previously. And their total assets on the platform grew to almost $6 billion from 4.3 billion in their September quarter, so the quarter previously. And as for the actual company, their headcount increased to 250 from 231, so there's an increase there. And now one thing I want to mention as well before I just leave you guys with the earnings call and finish the video, they are going to be working on an NFT product and a personal wallet, so they are working on that. Another thing besides working on the debit card that should be out this quarter coming up here, another thing is going to be a desktop version of pretty much the app, but as a desktop, and also dark mode coming to mobile, which this is going to be one of my favorite features. It's one thing that I would absolutely love because there's a lot of times that I'm sitting scrolling through Voyager, looking through different articles, and there's no dark mode, so it's just like lighting up my whole room, and I've got my daughter sleeping, and that's going to be one nice thing that I'm very excited for. And that's basically it for you guys. I'm going to leave you guys with the earnings, and of course check out the link below if you want to listen to the whole thing. I do recommend you do so because there are a couple things that I cut out of there. One thing in the earnings call is they do talk about Avalanche and that they are working with Avalanche lately, as well as going over a little bit of BlockFi's issues lately regarding just regulation and basically how BlockFi settled for like $100 million. And here's the article here. You know, there was issues regarding their interest-bearing accounts. Now, Voyager says that it's different than BlockFi, but I honestly don't see the difference necessarily. So that's one thing. Maybe you can leave me a comment below if you see some sort of difference. But, you know, if this is going to affect BlockFi, it's likely other regulators are going to notice this with Voyager and see that it's basically one and the same, at least as far as I understand. So that's one thing to consider. They do get a lot of their revenue from staking, okay, which is essentially interest. And that's one thing to consider, but that's basically it for you guys. Make sure you listen to the earnings call, and let's roll the clip.
I'm excited to report our best quarter ever, doubling our revenue from the previous quarter and highlighting Voyager's positioning and revenue opportunity in active markets. More importantly, during the quarter, we delivered significant revenue growth while scaling our systems to more seamlessly support a significant increase in customer activity, highlighting the steps we've taken to build out the scale and security of the Voyager platform in 2021 as we position Voyager for substantial product rollouts in calendar 2022. We started the 2021 calendar year with an innovative platform. At the time, Voyager had 38 employees, 43,000 funded accounts, and approximately 230 million of assets on platform. But we had the goal of becoming one of the leading crypto platforms in the United States. By the end of calendar 2021, we had 250 employees, 3.2 million verified users, and 1,074,000 funded accounts with over 5.9 billion of assets on platform. This level of growth makes Voyager one of the fastest growing cryptocurrency platforms in the industry and one of the largest in the United States. Based on data obtained from one of our investment banking partners, Voyager was third on the list of fastest growing public companies listed on any U.S. exchange, including the OTC markets, based on revenue growth in calendar 2021, with $416 million of revenue, up from just $6.6 million for the calendar year 2020. From the initial influx of customers in January 2021, the decisions we made focused on scaling to handle the increases in volume. In the December quarter, we reached new heights of activity that tested the system, and I'm happy to report that we had no delays or outages. The crypto industry is one in which there are tremendous ebbs and flows, but as revealed by our recent survey, 66% of Americans believe that crypto will be widely accepted and grow in value over the next 5 years. We are therefore excited about the future, and fueled by investment in our marketing efforts, we will continue to grow Voyager as one of the major players in digital assets in the blockchain industry. Voyager's goal is to build a business with multiple revenue streams through its current trading products, yield and staking products, payment and spending products, and future NFT and lending products. Transactional revenue is a key driver of the business. We recently added 10 new coins with crypto wallets for trading and crypto transfers, bringing our total up to 85 coins, of which we have 52 of them with crypto wallets. The large number of crypto wallets is significant, as while other notable players in the industry have no or very limited wallets, we allow our customers to hold their own assets and transfer them. We have plans to trade over 100 coins in the near future and add even more crypto wallets. Adding more wallets is a key area of development for us as the crypto ecosystem continues to grow. The ability to transfer these tokens, especially in the gaming space, is becoming necessary. When we add new coins, we tend to see an increase in customer engagement and an increase in trading. In addition to new coins and wallets, we are working on trading features and enhancements. Our near-term roadmap includes a desktop version of the app, a dark moon mode to the mobile app, stop orders, dynamic and tiered pricing, and swap functionality, with the expectation that desktop and dark mode will be rolled out in the March quarter. Voyager continues to focus on staking enhancements. We added additional custodians, which are necessary to expand the coins for staking. As the number of coins available for staking increases, staking revenue will continue to grow, and the expectation that it will become a larger and larger part of our overall revenue. On the lending side, the addition of Alameda Research, along with a few other borrowers, has increased our capacity and capabilities. Based on current market prices, we continue to target a minimum of $40 million in yield and staking revenue per quarter, and subject to the crypto markets, expect that to grow as we add more coins. We recently rolled out the debit card to a small group of employees for real-world testing. So far, the results are very exciting, and we expect to increase the number of users in the March quarter. The debit card is unique in nature by providing up to 9% annual rewards and is based on holding USDC, not fiat currency. The card has a bank routing number and an account number so individuals can direct deposit their paycheck and utilize it in place of a bank account. We also anticipate allowing consumers early access to their paycheck, similar to many of the neobanks. We have yet to fully execute our marketing plan for the debit card, but already have a waiting list of approximately 200,000 people. The product will also be connected to the Voyager loyalty program, which is also in the process of being expanded, and we envision adding broader consumer awards from popular merchants as well. The plan is for Voyager to earn revenue from the interchange and rewards from merchants. As we mentioned in the last earnings call, we received our fit and proper license from the AMF, the Authority of Financial Markets in France. We are progressing and delivering a crypto solution to French citizens as well as other parts of Europe in 2022. As the AMF approved Voyager to deliver the product as it looks today in the US, we can bring the benefits of the Voyager platform to the European audience. There is a wait list for Europe already, and by utilizing the recently acquired Coinify and their KYC and money movement features, we intend to make an impact in the second half of 2022. In Canada, we are working closely with the Ontario Securities Commission to deliver the Voyager offering to Canadian residents as well. We will keep investors updated as we learn more from the OSC. Our partnership with Market Rebellion to build an equity broker-dealer is progressing nicely. Not only do we have FINRA approval, we have a signed clearing agreement. The clearing agreement is a necessary step in building the brokerage of the future as we leverage the clearing firm technology to deliver an equity trading offering. Voyager will earn revenue on this partnership by keeping a piece of the revenue from customer balances and transactions. We will structure this offering so consumers will access the trading of equities from their existing Voyager app and will utilize USDC as a base currency for trading. We believe these innovative features are advantageous, and the delivery of the debit card is a key step forward for this product. Additionally, the payment system allows any payment service system or vendor to receive crypto as payments outside of the Voyager ecosystem, which has lower rates than the traditional system. Lastly, watching how the NFT business continues to grow, we hired a team to develop Voyager's NFT strategy. In line with our overall value proposition, Voyager plans to make it easier to access the NFT ecosystem by helping customers interact with, organize, and extract value from their NFT portfolio. Our goal is to simplify NFT participation today and in the future, regardless of how the culture and ecosystem evolves. We plan to design products that will enable consumers to react quickly to market changes and safely manage their portfolio. We will continue to focus on user growth as our primary marketing objective and to educate users about the benefits of digital assets and use cases where investors can participate in the wealth-building opportunities available on the Voyager platform. We are really excited about the launch of our latest campaign, Crypto for All, as it expands upon the growth we saw in the December quarter when we added the Dallas Mavericks, NCAA basketball, and the National Women's Soccer League to our NASCAR partnership with Landon Castle in both the Cup and Xfinity Series. We continue to be the third highest ranked pure crypto app in the Apple App Store and strive to gain traction versus the two larger companies ahead of us. We will continue to focus on differentiation and value creation through our existing and future marketing channels. One of Voyager's organizational objectives is maintaining transparency and accountability with customers, constituents, investors, and employees. To support this objective, Voyager will begin its first SOC 2 audit in June 2022 and will continue annually thereafter. The SOC 2 is a critical element to Voyager's continued achievement of best-in-class service and product offerings, as SOC 2 provides assurance that a mature, sustainable security program has been implemented, protecting all stakeholders' assets from unauthorized access. Additionally, completing a SOC 2 audit will differentiate Voyager from competitors by clearing a path to increased partnership opportunities and additional highly accredited organizations. Lastly, we want to address the recent news about the SEC order in the matter of BlockFi Lending LLC. We recognize that this is a significant development in the industry and will provide a potential regulatory path for market participants. We also understand that some may view Voyager's rewards program to be similar to BlockFi interest accounts. While we understand the temptation to bucket them together, we think there are important differences between Voyager's program and BlockFi's that we think have legal significance. That said, we are in ongoing discussions with regulators about the rewards program, and it is, of course, possible that regulators may have a different view. Under the circumstances, we think it's important to confirm that Voyager has received requests and subpoenas from the SEC and certain states in connection with the rewards program as part of non-public fact-finding inquiries. Of course, we believe that Voyager accounts that earn rewards comply with existing U.S. law and look forward to demonstrating that as necessary. We think it is normal and appropriate for financial service firms, especially in the crypto industry, with its evolving regulatory framework, to receive inquiries from regulators and law enforcement. When Voyager receives such requests, our policy is to cooperate fully, but we limit public discussion as these matters are always evolving, and as a public company, Voyager is subject to important rules regarding disclosures about its business. I want to make it clear that Voyager strives for overall compliance and has a team of legal and compliance professionals and outside advisors working hard to help us operate within the rules that they exist today. In closing, we continue to believe that we're in the early stages of crypto adoption, and there is significant opportunity for Voyager to grow users and revenue as we execute our game plan. We are a group of industry veterans who, having seen 20-plus years of market activity, understand the volatility that markets have. We think that leadership experience positions us to execute and build an industry leader. The crypto market will continue to have its ups and downs, and our revenue and volume will reflect those moments, but we take pride in creating the third largest retail platform in the U.S. based on retail assets on platform and number of funded accounts. I am truly excited about where we are and where we are going. Voyager's business continues to grow every day, and the company is well positioned to become a leading brand in the digital asset space. This truly is an exciting time in the industry. With that, I'll turn the call over to Evan to review the quarterly financial results in more detail.
Thank you, Steve, and thank you all for joining us today. As a reminder, all figures discussed in today's call are in U.S. dollars under IFRS. I will speak to our fiscal 2022 second quarter ended December 31, 2021. As Steve highlighted, our second quarter was our strongest ever, as our business grew across almost all our key metrics, including volume, customer accounts, net deposits, and all distinct revenue lines. As volume and funded accounts grew, so did our assets on platform, increasing from $4.4 billion in the September quarter to $5.9 billion at the end of the December quarter, with approximately $1 billion in net new deposits, making up the majority of the $1.4 billion increase. Total revenue for the quarter was $164.8 million, including approximately $86.5 million in transaction revenue and approximately $57 million in lending and staking activities. As I discussed in our last call, revenue from lending and staking activities was a priority for us and exceeded the target of $50 million we previously provided. Looking at some of our unit economics, average revenue per user was particularly strong at $57 for the December quarter. Additionally, our rewards program continues to be a driving factor of success, and while the overall cost has increased, we have actively managed this cost against our lending and staking activities with a future focus on turning this to a profitable business line. On an adjusted EBITDA basis, we reported $17.4 million for the quarter, a margin of approximately 10.5%. Again, as previously discussed, we are comfortable with this current level of profitability as we look to prioritize accelerating growth in funded accounts and deposits. The beginning of 2022 has led to lower market volumes, although we have recently seen a slight uptick in volume. The diversification of our revenue is leading us to believe that even in times of lower market activity and lower crypto prices, our minimum quarterly revenue will exceed $100 million. The increased revenue diversification strategy and product roadmap will only increase the minimum floor, as will increase volumes and market prices.
Good morning, everyone. Thanks for taking my questions. Maybe you could just start off just on the rewards paid to customers. You noted that lending and staking revenue has been increasing, some positive trends there, and looking at close that gap. Maybe any color in terms of the time frame, in terms of when you can close that gap and turn that profitable, and whether there's further opportunities to build out staking from here moving forward.
Yeah, thanks for the question, Chris, and thanks for joining us this morning. We don't have a time frame on it. It's part of an ongoing effort to increase the staking. There are certain coins. I'll take Avalanche for one, and we have a deep partnership with Avalanche that we're building to their nodes and working with our custodians to make sure that we can stake. Hopefully we finish that sooner rather than later, and that'll be a substantial increase in revenue for us on that too. So it's just a matter, as we keep increasing the custodians we have and working on with them on the nodes, increasing it. There's no set time frame, but we believe in 2022 at some point. Yeah, I'll tell you this, that, I've always said this, the first 500,000 users won't equal and won't look like the next 500,000, which won't look like the next 500,000. We're getting continued deposits from existing customers, and they always start small. They always come in and they put a little bit in, and remember, our initial funding limit for every customer is only $10,000, and when they get comfortable, they see they can use their money right away, they can get it out, they start increasing more. But it's a longer, time frame here that we expect, is that people will start coming in with a couple thousand and keep building on top of that, and that's what we're seeing, is continued deposits from consumers over time. And so it's just a trend. I think people want to get comfortable, especially when you're getting some new people into crypto. They want to make sure that they can access the funds, and then they'll add more. Yeah, that's part of the strategy of debit card, to your question. On the debit card, bringing that will bring more assets that consumers will hold with us. We're seeing a lot of people already saying they're going to eliminate their bank and come use Voyager as their bank. And so that's one product. Then the equity trading, then the credit products we're going to add, the NFT products, will all expand the ARPU and therefore allow us to get more value out of each customer. Similar to the way we execute our business for trading, in that we connect to multiple places. We believe that there are so many marketplaces out there. Consumers want to be able to access them all, and how we deliver that entire environment to them is what we believe is the future of NFTs. It's not just one marketplace, and so we're looking at a solution that encompasses a larger scale, all off the Voyager platform.